Good morning, Predicted Trades family. Hope everybody's doing well. Let's dig right into some prep. So yesterday we had a big old sell-off. If we take a look, we came from last week down at the bottom of the daily squeeze and a rally up Thursday and Friday to the top of the daily squeeze. Monday, we tagged it and it started a sell-off late day. I talked about this on Monday, how it looked like it was going to be a slow grind up and then a late day sell-off. And then yesterday, the fact that we opened below the previous day's low was a big indicator that they have changed directions and we're heading lower. We got a quick drop to that 41.65, tried to hold for a second, and then gave a bigger drop down to the daily 21. We overshot the daily 21 down to our big key levels and then reversed back up to close near the daily 21. Now, if we look at tonight's, the overnight session from last night into today, we held up above where we closed. We held up to the daily 21. We are at the daily 21, daily 8, daily 15. So we're at a bunch of liquidity coming into FOMC. It'll be interesting to see if we can going into FOMC, hold this 41.36.5, fight up to this 41.56, 41.65, and we just stay in this zone going into the FOMC announcement. We could get a reaction that drops us back down to yesterday's lows and to the bottom of this daily squeeze. We could get a reaction that gets us back above this zone of 41.56, 41.65, hold it, and then fight back up to the top of the daily squeeze. We're about to be opening in the middle, at the mean, so we have to be patient. We have to play this range until it starts to break one way or the other. Overall, if we look at the daily, over here, you can see that we have, starting weeks and weeks ago, back in March, started the rally up here, and we are basically in a bull flag. We did slip down a little bit below, but it was a look below and fail. Buyers stepped right back in and got us into that bull flag. So, right now we sit with our resistance above and our support below. The support, let me get a better shot, is just from when we got up into the flag and had our first good pullback and hold. I created a little zone based on that low wick and the open of that candle and projected it forward. So that is our support, right at around 4100 up to about 4115. And our resistance sits up about 4180 up to 4190. So let's see what we get today. And if we can hold this zone, we're going into open with a 30-minute squeeze that's well established. A 1-hour squeeze is also starting to form. Looks like the bottom of that 1-hour squeeze is down near 4120. So if we start to lose 41.36.5, we'll fire this 30-minute squeeze down to the hourly squeeze bottom at 4120 to try to hold near yesterday's lows. If we can hold up this 30-minute squeeze bottom, then it'll be a push to try to get through pre-market highs, get back to this daily 8, daily 15 above, and then to try to fight back to the zone that we gave out yesterday. That's enough for ES. Let's move on to NQ. After the sell-off yesterday, we want to take gauge of how the indices are doing and how individual names are doing. Some names held up quite well in the sell-off yesterday, so we want to try to take note of what those names are. So we saw on ES that we overshot the mean and then came back to it. Well, on NQ, we didn't even get to the daily 21, this white line. which was sitting at about 13,100. That's a big key level of support. So you could save 13,100 up to 150. We want to see that hold today for upside thesis on any pullbacks. There's a nice strong uptrend on tech overnight. We had AMD report yesterday. We'll look at each name that reported. So either way, let's see if we can hold daily liquidity. If we do have another little drop near yesterday's low, looking for that to hold. 13,100 to 150. We've got the bottom of an hourly squeeze sitting there as well. As long as that can hold up, looking to fight back above 13,250 to fire that hourly squeeze to the upside to get back up to the highs and the top of this daily squeeze. If we start to give out that 13,100, then we'll go down to 13,000 and likely these key levels at the bottom of the daily squeeze. On to ready. Oh, come on, charts. Load a little faster. All right, so the ready looking definitely weaker by comparison with the other indices. I'd say today it's all about holding 1730, and at the worst, yesterday's low 1720 at the bottom of this daily squeeze. We start to lose 1720, then it's 1710, 1700, reaching further down into the bottom of this two-day squeeze. But if we can hold, looking to try and take out this zone at 1745, 1750, that can green light us to the upside to get back to the daily 8 at 1760, the daily 21 at 1775, daily 15 at 1780. Moving on to YM. Ready is definitely the weakest among the indices, something we want to keep an eye on. They're not really rotating into small caps yet in this attempt to break this flag to the upside. Man, look at that. Pretty much to the penny. We gave out 34,000, straight down to 33,520. And then back up to these daily moving averages. So on YM, very simple, we need to hold this daily 21 and basically like 33,750. We start to lose that 750, then we will likely come back down to test 13,675 and that 13,520, 33,500, sorry. But if we can hold this daily 21, that 33,750, and start to take out 33,880, where the daily 8 sits, then it's a playback up to 34,000, 34,100, where we sold off from yesterday, and these recent highs back up to the top of the daily squeeze. Apple. Apple reports tomorrow after the bell. So we still have one big tech name looming out there. Let's take a quick look at our economic calendar while we wait on that to load. Today, we've got some ADP coming out at 8:15. We've got some PMI at 9:45. We've got a little more ISM at 10 a.m. Then at 2 p.m. we've got the FOMC announcement, and at 2:30 we got Powell speaking. Tomorrow we got our jobless claims, some productivity trade deficit. Friday we've got just more unemployment data, more jobs data. Looking into next week, we have CPI and PPI. Two big ones coming right off the heels of an FOMC. So Apple, just basically rejected the top of a 4-hour squeeze and fell to the bottom of that 4-hour squeeze. That's why we track these squeeze tops and bottoms and where they're at as targets. If you shorted Apple yesterday from that 170, the target was to get back to this 167.5 at the bottom of the 4-hour squeeze. So today, it's all about holding the bottom of that 4-hour squeeze, yesterday's low, and that daily 8. Should the market have negative reactions to FOMC and everything starts selling off, we'll likely see Apple lose this 167.5 and fall down to this 166, 165, where the daily 15, daily 21 are sitting. Very clear targets should we start to give out this 4-hour squeeze in that 167.5. But if we can hold that 167.5, 168 on any dips, looking for us to fight back above 169.5, get back up to 170, 170.5, 171.31 is the big key target to the upside. Should we continue? AMD. Well, AMD held up well yesterday, but they reported big old tank down to some key levels we have near 82, 83. So ultimately looking for 82, 82.5, that overnight or that pre-market low, to try to hold. As long as we can hold that, then it'll be a fight back up to 84, 85, 86. We closed way up at 89. If we start to give out 82, then it'll be down to 81 and 80. Amazon. So if we just look at the structure on Amazon, we held the mean around that 101 a couple of times going into earnings. Great reaction to earnings. Everything came right back. And we've slowly, talking about Monday into Tuesday, we slowly came down right near that low, that 101. On Monday, straight sell-off down to it. Yesterday we held it and popped up, and the market's selling off and Amazon's sitting here. So we always want to take note whenever a big name holds up well while market is selling off. The whole market dropped yesterday. Amazon popped up and stayed, so this should be on our radar. It came back to that low before earnings. You could say they've been loading the last 2 days, and this thing could be a leader to the upside. We can get back over 104.5 where the daily 8 sits, then it's a play straight up to 106.75 where the daily 200 sits, and then up to 108 where the 4-hour squeeze starts, up to 110 where it ends. If we start to give out, say 102, then it will be a trade back down to 100 and the daily 50 and the squeeze bottom at 98. Moving on to Google. I'm not going to go over BA and CAT, but they're both holding above 200, which is a good sign for both of those names. Should either of these start to go below 200 and more selling continue, they will be a drag on YM. As long as they keep holding up, those are two huge names. As we're in this bull flag. Google. Very interesting earnings reaction, 101 up to 110, and now we sit in that range. Yesterday did sell off with the market, but not that hard. Didn't even get down to our 103 that it held. So you could say buyers were sitting and waiting down near these lows to get back in. Today, as long as we hold above the daily 21 at 105, looking good for a green light to the upside to get back to 107.5. If we start to give out 105, it'll be a trip to retest yesterday's lows near 104 and that key level 103 near the bottom of the daily squeeze. Below 103, target down to 101, 100.5, where the daily 200, daily 50 sit right on top of each other. Moving on to Meta. Oh, Meta had that huge reaction on earnings, and now we sit up in this range, basically from that earnings high around 235, creeping up to 245 yesterday, and barely coming back with the market. As long as we can hold 238, 240, then it's a play on Meta to get back up to that 245, maybe push further to 250. If we start to give out that 240, 238, then it's down to 235 at the bottom of the 4-hour squeeze. Should 235 start to give out that high from that earnings wick, then it'll be a play back to these moving averages below. Let's say the market sells off further from FOMC. Meta giving out that 235 could cause a quick snap sell-off to these daily moving averages. Something to keep an eye on. Microsoft. Microsoft also the strong reaction on earnings and living life above 300. Got a key level at 303. Looking for that to hold at the bottom of a 4-hour squeeze. And as long as we can hold, it's a play back up to yesterday's highs near 309, up to psych level 310, 311.5 where the third Keltner to the upside sits, and then like 315. If we start to look weak, it'll be a dip to retest that 303.2. Should that start to give out, then it's a play back down to 300 and 298-ish where the daily 8 sits. Should 297.5 gives out, then it's down to 291 where the daily 15 and the daily 21 sit. Netflix. So on Netflix, we had earnings a few weeks ago, and we've just kind of been sitting, waiting. Yesterday we got down to 315, looking like we're about to open near 318, so basically looking for 315, 315.5 to be support if we have any dips, as long as that can hold. Looking to play back up to 320, 323 where the daily 50 sits, 325 where the daily 8 sits, 327.5 where the daily 21 sits. If we start to lose at 315, then it'll be a play down to 310 and 307.5. Key levels below. NVIDIA. Come on, NVIDIA. There we go. Had that strong reaction on Monday to get up to 290. Brought it back yesterday, but we're holding near where we took off from on Monday. So that is your support right now. And basically, you could tag this pre-market low. Put it back to yesterday's pre-market high. And there you go. Little zone of support. We have the daily 8 right there as well. So looking for this to hold around 277, 278. As long as we can hold there. Looking to fight back above 280, 284 to get back to 285 up at the top of this daily squeeze. We start to give out 277 in the daily 8. Then it'll be a play down to 272 where the daily 15, daily 21 are sitting. Moving on to QQQ. So QQQ sold right back to the daily 8 and our key level 317.75 and held that yesterday. This morning, it's still that daily 8, daily 15, creating a zone of support right near a key level, looking for this to hold. Basically 318 to 317.5. Looking for that zone to hold. If it can, then it's a play back above 320 and then back up to 322, 323.5 recent highs. Top of the daily squeeze, 325. But if we start to give out our support, if we have a negative reaction from FOMC, then it will be a play back down to the daily 21 at 316.25. Should that give out down to 315, 314.5, and should that give out, then down to 311 or 312, 311.5 at the bottom of the daily squeeze. On to SPY. So SPY, just like ES, overshot that 410 yesterday, just a little bit back above. Overall, looking for the daily 21, sitting at basically 410 to hold on any dips. As long as we can hold there and start to take out 412 where the daily 8 sits, then it's a play back up to key level 414. And should we get above that, then back up to these recent highs near 417, top of the daily squeeze. But if we fall and lose that 410, then it's a play back down to yesterday's low at 408. Should that give out, then it's down to 405 at the bottom of the daily squeeze. Tesla. Tesla. Come on, Tesla. So, Tesla, negative reaction and sold off on earnings. But at least, and I have said, leave it alone for a while, wait for some structure to form. As we can see, it's not really been doing all that much, just trapped between 150 and 165-ish, right? But if we look, there's a nice base that's been set in here around, let's just call it 158.5. So, I'm going to create a little zone here. And we'll connect to this low. Come on. So, that zone now aligns well with the bottom of our 4-hour squeeze. So as long as we can hold around 157.5 to 158, then it's a play back up to 165, 167.5 up at the top of these squeezes. If we can get through there back to 170, 172, where the daily 15, daily 21 sit. We start to give out that 158, then it's going to be a play back down to 152 and 150, where that third Keltner, the downside, sits. And VIX. So VIX was very interesting yesterday. Took off from that 16.5, got all the way up near 20, and then just faded back. One big drop to get us up near 20, and then the fade on back. Now we sit at our daily moving averages. So, if we are going to see more selling on the market, we have FOMC today, so I expect us to kind of stay in range while they build position. Should the reaction be negative and we see more selling, then we will likely see VIX stay above 17, 17 and a quarter, where the daily 15, daily 8 are sitting. We'll see VIX start to take off through 18, 18 and a quarter, and make the journey back up to 19, back up to yesterday's highs, near 20, near the daily 50, and the top of the daily squeeze. That's if we see more selling today. But if we hold this range that we're about to open in, and then we see a positive reaction on FOMC and the market starts to push back up, then we'll likely see VIX hold below 18 and a quarter, drop down to the 17 and a quarter, start to give out 17, and get back to the 16 and a half, 16, maybe even recent lows of 15 and a half at the bottom of the daily squeeze. Hey, good morning, Rose Casanova. I see you dropping a message in the YouTube chat. Thanks for tuning in. Good to hear from you. You've always got a home with predicted trades, so definitely feel free to drop in the chat, check in with us. There's always trades flying around. So that's it for prep today. We've got our targets upside, downside on everything. We got a good gauge on VIX to understand if we're going to see more selling. Probably going to get above that 18 and a quarter, 18 and a half, and start to fly. If we're not going to see more selling and we see a good pop and rally, likely going to get back below 17 and a quarter, 17, and get back down to these lows. Take a quick look at ES again. Look at the daily structure. 2 strong days up, a very mixed day at the top of the range at resistance, a sell-off straight back down to support, and buyers stepped in to get us right back to the mean. Now we're trying to pop off that mean. So watch that 41.35 today. Going to be very, very key. Break below that, below 41.30. It's going to spell that downside. As long as we can hold in that range and the reaction to FOMC not really violate too hard, then it'll be a push right back up to the top of this flag. So that's it for prep today. Good luck, everybody. Thank you for tuning in. We'll see everybody in the chat.